Welcome to the Everything Financial Radio Show on the Legacy Radio Network. Glad you're with me today. I'm your host, Dennis Tubbergen. We have a terrific show lined up for you again this week. I will have joining me in just a moment Mr. Karl Denninger. We're going to get Karl's take on what's going on in Europe. We're going to get Karl's take on China. We're going to get Karl's take on what the Federal Reserve will do when they meet later this month. In just a couple of weeks, he will be joining us momentarily. Also, a Swiss asset manager this past week said that he expects that exchange controls will be coming in virtually every country. If you don't know what exchange controls are, exchange controls would simply mean that you have to petition a central bank to get permission to exchange your currency into another currency. It's happening now in Argentina, and a gentleman who manages money at Matterhorn Asset Management, a Swiss company, says he expects that we'll see this worldwide. Also, Lloyd's of London this past week publicly admitting that they're preparing for a euro collapse. Dr. Mark Faber, a prior guest on the Everything Financial Radio Show, was also recently quoted predicting that the chances of a global recession were 100%. We'll talk about all that on today's show. First, though, if you would like to attend a discovery group and you've not attended a discovery group in the last 3 months, feel free to go visit personallegacyseminars.com. That's personallegacyseminars.com. And go ahead and click on the appropriate link. We have 3 links there. We will be at the AMG Business Center in Norton Shores near Muskegon on Tuesday, June 5. We will be at the Spring Lake Country Club in Spring Lake, Michigan on Thursday, June the 7th. And we'll be at the AMG Business Center once again on Tuesday, June 12th. Again, go to personallegacyseminars.com to get more information or to register. And again, please, if you have attended a discovery group in the last 3 months, please let someone else attend. These have been reaching capacity. Also, is a 3% yield on an account with 100% liquidity possible? Is a 3% yield on an account with 100% liquidity possible? A free report reveals the answer and full details. You can call 1-866-962-5735. That's 866-962-5735. And enter extension 1008, and we'll send you a free report. I'll give that number again momentarily. And also, you'll hear that number throughout today's show during the breaks. 866-962-5735, extension 1008. We'll be talking in just a moment with Mr. Karl Denninger. Karl, his work can be viewed at market-ticker.org, market-ticker.org. And again, the phone number to call to get the 3% yield report, 866-962-5735, extension 1008. Back by popular demand today on the Everything Financial Radio Show here on the Legacy Radio Network, Mr. Karl Denninger. Karl, thanks so much for being with us.
Oh, my pleasure.
Hey, Karl, you write an informative and some days provocative blog, probably the most prolific blogger on things economic and financial and political. If someone wants to learn a little bit more about your work, before I forget, I'd like to let them know where to do that. So if you could let them know where to read more about what you do.
That is at market-ticker.org, O-R-G, and you'll find the latest is always on the top, and it's usually a good idea if you haven't been there in a little while to page on down and make sure you go to the next page so that you don't miss things, because it is not infrequent for me to have 4 or 5, sometimes even more things up in a given day.
Yeah, and I would encourage the listeners to do that. It's a great perspective, and again, glad to have you on the show here. Karl, bond yields in Europe again this week, with the exception of Germany. I think 10-year yields in Germany were at 1.3 to 1.4%, but Spanish bonds for 10 years approaching 7%. Same thing in Italy, although they lag Spain a bit. Interest rates are rising. We seem to have Spain and Italy on the same slippery slope that we saw Greece on a couple of years ago. What's your take on how all this plays out? The bond market seems to be saying enough is enough.
It's not very hard to figure out, really. When if you look at this from a standpoint of personal experience, as you borrow more money and become more heavily levered, the price that you pay to borrow each additional dollar goes up. And that's because it's less likely you'll pay. So when you have governments that take over from an overly indebted system and start trying to prop up what amounts to a Ponzi scheme, and all exponential growth on a permanent basis is a Ponzi scheme. It's mathematically impossible for that to work. Eventually, the government's borrowing rate starts to rise, and that's your indication that the game is over. When you have governments that refuse to face the fact that they cannot spend more than they take in taxes, then they start down this slope, bond rates go up, and eventually they find themselves unable to borrow on commercially reasonable terms, and that's the point at which everything comes apart, like has happened in Greece, and which is going to happen in Spain, Italy, Portugal, and ultimately the rest of the European Union. That is, if Germany doesn't just walk away from it first.
Carl, there's you mentioned Greece. There's some elections coming up in Greece here shortly within the next couple, 3 weeks. The last election had fringe groups, fringe right and fringe left groups actually winning a pretty significant share of the vote, unable to put together a government that works. So we're going down the road of more elections. Do you think that you're going to see Greece, as a result of these elections, leave the euro, or do you think Germany throws in the towel first?
I don't think there's any way around Greece leaving the euro in terms of its debt load. Whether or not Greece leaves the euro as a currency is entirely up to them. And please remember that there is no means available to expel a member from the currency union. So the nightmare scenario, actually, for Germany and the rest of the European Union is that Greece sticks its bonds in the paper shredder, sends the pieces to Merkel, and doesn't leave, and then turns around and balances its internal budget. The problem with the far left parties is that they seem to think that they can get something for nothing. In other words, if they were to just repudiate the debt, that this would be enough. It's not. You still have to balance the internal government budgets. You cannot have more going out from the government than you take in taxes. And so I don't know that we have an actual solution here, but it is definitely a step forward to tell the international financiers, because let's remember, the Troika is essentially just paying off the Greek banks at this point. None of this money that's coming in from the supposed international community is actually going to citizens. Something like 5 or 10% of it is actually making its way into the economy. The rest is just paying the interest charges on what's already been borrowed. So that entire scheme is, in fact, a scam, and it is correct for the Greek people to throw it off.
Carl, this will mean either way, however this plays out, we're going to see certainly a lot more unrest in Greece because based on what you just said and based upon the research I've done, it's going to be impossible for Greece to continue to pay its generous pensions, have its generous fringe benefit packages for public employees, people retiring at age 50. No matter how this plays out, there's going to be a dramatic lifestyle change for folks in Greece. Wouldn't you agree?
Absolutely. The fact of the matter is that you cannot demand that the government provide services that it can't pay for in taxes. And that means that for every country, including the United States, including Greece, including France, including Spain, we have to have this adult conversation. And we have gotten away from doing this. We haven't done it here in the United States. They haven't done it in Greece. They haven't done it anywhere else in Europe. And this has been, for all intents and purposes, a gigantic scam, because what has happened in Greece and is happening worldwide is that as we have put more credit into the system and debased the purchasing power of everybody in the economy, the government has stepped in and picked up the slack with these social benefits, with these so-called safety nets, whether they be pensions, Medicare, Medicaid, whatever have you. But essentially what you're doing is borrowing more money to pay off the credit card that you just ran out of limit on. So you get a new application in the mail, you transfer your balance, that one has a higher limit, and life goes on, right? Well, this is what we've done internationally, and the Greeks have to face the facts that this cannot continue. The Americans have to face the same facts. The French and the Spanish and everybody else has to face this. Nobody, as of yet, has done so, and there is a great deal of turmoil and a significant degree of asset price appreciation that has taken place on the back of something that is inherently a fraud. This is coming to an end. That's why we're seeing these convulsions today.
Carl, we've got about 2 minutes left in this segment. What is your take on not only the European banking system, but maybe the worldwide banking system, and how let's start with the European banking system, how it would be affected by the fallout when Greece defaults and when other sovereign nations default on their debt?
The private banks throughout the European Union will collapse. There was no deleveraging that was undertaken. There was no cleanup that was undertaken of any substance after the 2008 crash. The German banking system is, if anything, at least as fragile as the rest because the leverage ratios are so high, and they are holding on to hundreds of billions of euros of trash debt that they are marking as perfectly good because it's sovereign credit, and it's never going to get paid. This is the only solution to this is for these institutions to go bankrupt, these asset prices to reset to sustainable levels, and then new banks to be capitalized from, with real regulation this time. There is no other way out of this box, and yet absolutely no one in the financial system is prepared for this.
We are chatting with Mr. Karl Denninger, and Karl, just in case someone's just joining us, where can they read your blog again?
Market-ticker.org.
I would encourage everyone to do that. I find it informative and provocative. This is the Everything Financial Radio Show on the Legacy Radio Network. We will return and continue our conversation with Mr. Karl Denninger after these words. Stay with us.